Yes, guys, what is going on? Welcome back to Young Money Investing. It's Sunday afternoon, time for my weekly market prep where I go over the major US stock markets so that you can put some structure on what exactly is happening in the markets, decide whether or not we're moving in an uptrend or a downtrend, and ultimately make better trading decisions to help you make more money. If you enjoy this content, please smash that like button. We are growing this channel slowly but surely, but please go smash that like button. It lets YouTube know that this is good content and they should be showing it to other people, which I would really appreciate. So if you could do that, it takes about 2 seconds, if that. I'll wait right here. Okay, perfect. Thank you so much for that. Let's go ahead and jump into the chart. Alright, so we're actually going to start out on a weekly time frame looking at Coinbase, which was my trade of the week from last week. Absolutely smashing trade. If any of you guys managed to catch this, last week went up as much as 22% at its peak, closed out the week up 16%. Absolutely smashed it. I don't want to toot my own horn too much, but I call this one. So if any of you managed to take advantage of this, congratulations. You should be sitting on some real pretty profits right now. I know I am. I have another large tech stock lined up for the trade of the week. But before we get into that, let's take a look at the DXY. Looking at the daily time frame, where's my 200 moving average? 200, there you go. Looking at the chart here, you can see that we are kind of starting to put in kind of this trend line here. Looks like is currently intact. So if we are going to come back up and touch it, should be right around 104, somewhere right in this area, right in here. I think that you could see price action come in, touch the trend line, and then possibly see another rejection. The other thing to note is it kind of seems like it's a bit of a wedge formation. So you can see we have this kind of downward sloping trend line, this upward sloping trend line, and then the only question that remains is which way is this going to break. Personally speaking, this is a personal opinion, not financial advice. Please don't make the mistake. I think that it is going to break in a downward direction. I think that we are going to see a retest of this 101.62 level and ultimately a break even as far down as this 99.19 level. That's going to be a couple weeks in the future. Don't worry about it too much for out. Just kind of keep an eye on this wedge formation, see what happens, because we do still have the 200-day moving average above us. We still have this red resistance area above us, and the 50 and the 20-day moving average look like they are about to flip as well. So quite a convergence of bearish factors currently in effect on the DXY, and so because of that, as well as some more macroeconomic things, I do think that we'll see more downwards movement. Jumping over into the Nasdaq still just up and away. Kind of cooled off a little bit last week until Friday. Got a real strong 1.5% day on Friday. You can see we came down, touched this 20-day moving average, got a pretty good rejection off of it on Tuesday, and then just continued moving higher. Not quite back up to the peaks from about 2 weeks ago, or I'm sorry, last week, which was, let's see, the high here was 15,475. Not quite back up there. We are trading at 15,337, so about 100 points off or so, 130 points off or so. Not too far. As we zoom out to a weekly time frame here, you can see just very extended. The Nasdaq has pretty much been on an uninterrupted tear since the beginning of this year. Is up currently year to date 43%. That is absolute insanity. 43%, pretty much no pullbacks at all. I know I keep saying this. I feel like it has to give way at some point. I can't tell you when for sure, but I don't think we're out of the woods yet. I think that this is maybe a little bit premature. I think the economy is weaker than the stock market is letting on. And I just want to put out there, just be cautious. Please don't invest more money than you can afford to use. Yes, over the long haul, the markets are a great place to build long-term wealth. But if you are a trader or you are looking to capitalize on some short-term movement, please be careful. Please be smart with your money, because this is not natural market dynamics at work here. Let's go ahead and jump over to the Russell. Russell looks a little bit better. We had this really clean move back down. You can see, I'll actually get rid of this here. Really nice breakout, retest, and then break again. I really want to see a break at this 1923 level. This is such a solid, clean breakout for me. Like I had previously spoken about, I wanted to see this, what is the low here? 1825. That was the level I wanted to see hold, 1825, right at the top of this channel. And we did. We held it. We got a solid move up. Green days the entire week. Closed the week up. Let's see here, 3.7%. So really solid on the Russell. I would really like to see this 1923 level break. If it turns into resistance once again, price action is unable to break out, I would honestly expect price action to fall back down to this 1734 level. That's not what I want to see, but if we can't break this level, if it continues to hold, I do think price action is going to see that rejection all the way back down. I'd like us to break out and just kind of take off here. I mean, the Russell really has not had a breakout like any of the other indexes we've seen this year. It's mostly been sideways action. I'd like to see the Russell have its moment. Let's jump over to the Dow Jones. Dow Jones really looking a little similar to the Russell. Mostly sideways action apart from this tear going back from October of last year. Huge move up into the beginning of this year. And then pretty much just all sideways action since then. Got a bit of a gap day on Friday. Let's see, how much did we gap here? It gapped up about 0.5% or so. Closed just slightly above this 34,345 level. I am wondering, because we have this gap in confluence with a close above this level, are we finally going to see a real break of this level and see it move back up into that 35,410 level? Only time will tell, but I will be keeping an eye on the Dow Jones this week, as this is quite bullish to me. The RSI has crossed above its moving average, not quite running into overbought territory yet, but not too far off either. But I do think that we could at least see a break of this level, move back up to 35,410, and then from there, you kind of just have to take a breather, reevaluate, and see what's going on. Now, I did promise you another trade of the week, another large cap tech stock. This week, we are going to be looking at PayPal. PYPL is the ticker. I really like the shape here. You can see that we have this gap zone here, as shown in yellow. This gray box is kind of a consolidation channel, and so you can see price action comes down starting in February, sideways action for several months until about mid-May. Big gap down, kind of continue the movement, and then slowly moving back up. I really like, as we zoom in here, that we have this kind of rounded bottom moving up into a slight move down into the 20-day moving average, and then a nice green candle, 1.3% off of that 20-day moving average. So what I'd like to see is a break above this recent high, which was 69.20. So if you wanted to go ahead, jump in maybe 69.25 or something, we'll go ahead and say 69.50. You could ride this up to close the gap, would take you for about 8%, 7.5%, 8%. If you run it all the way up to the top of the consolidation channel, that would take you for about 12.5%. I think that this is a solid opportunity here. I love gap fills. They are super high probability, especially when you have this kind of downward sloping channel. You know, we kind of move back up to kind of where the gap starts, a little bit of downward consolidation, kind of digesting the rest of this move, and then a nice close off of the 20-day moving average. You guys, I mean, from a technical perspective, I love this setup. I might even consider getting in, let's see, the high is 67.34. Yeah, I could say you could get in above the wick of this candle. Remember, this is not financial advice. Please make your own trading decisions. And if you win or lose, please don't blame me for it. But let's go say here, we'll take our position here. Bottom is just going to be a little bit below the 20-day moving average. If you take it up to the gap fill, that should take you for, close this a little bit, there's our gap fill, take you for about 2.75 reward to risk. If you took it all the way up to the top of the consolidation channel, that would take you for about 3.93. So somewhere between 2.75 and 4 on the R multiple. Really solid. I think that this will probably be a trade that moves pretty quickly, maybe not quite as quickly as Coinbase did, but probably only a couple of weeks from entry to exit. So thank you guys so much for watching. I do appreciate each and every single one of you. Please go smash that like button, show me some love, show me some appreciation, smash that subscribe button. While you're down there, click the like button. Help me grow this channel, let YouTube know that I drop fire content, and I will see you all next week. Peace out, homies.